You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 10th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room from 9:30 a.m. to 11:30 a.m. Eastern. That's private, reserved for members only, and those taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael joins us in a bit, he'll walk you through step by step exactly how to take it. It's a piece of cake. We'll get your indicators up and running today. You'll have the weekend to get familiar with them, and then your trial will begin Monday morning at the open, and you'll have all 5 days next week. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, I'll give it to you first. You only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link. Fill out the 30-second registration form. And you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In that email, there's a link. So at 12 noon Eastern, just click the link in the email. It'll automatically log you into our platform, and that gives you access to the question box, so you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're just busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Our schedule each day during the afternoon broadcast, our daily devotional, word of prayer, news, recap of the logic alerts, the concierge trade alerts. About 50 minutes into the broadcast, Michael joins us for a recap of what happened this morning in the live training room. And then we do a little live trading on the TradingView platform and wrap things up with our good word for the day. So with that, let's get to our devotional. The topic is 7 ways to renew your mind. We're on day 3 of 7. Today's scripture is Psalm 119, verses 9 through 16, and I'm sharing with you from the Message translation. How can a young person live a clean life? By carefully reading the map of your word. I'm single-minded in pursuit of you. Don't let me miss the road signs you've posted. I've banked your promises in the vault of my heart, so I won't send myself bankrupt. Be blessed, God. Train me in your ways of wise living. I'll transfer to my lips all the counsel that comes from your mouth. I delight far more in what you tell me about living than in gathering a pile of riches. I ponder every morsel of wisdom from you. I attentively watch how you've done it. I relish everything you've told me of life. I won't forget a word of it. Again, Psalm 119, verses 9 through 16. So today we're on the third step of how to renew your mind. What you feed your mind becomes a mindset. A mindset is impossible to change without first changing what fills your mind. Typically, when we hear the truth about breaking strongholds or renewing the mind, we get busy trying to change our mindsets. Then we quickly learn that it is not an easy task. A mindset is what controls you. The mind is what you control. The only way to change your default thinking is by filling your conscience with new information about God's truth. Once the conscious mind is filled to the overflow, it slips into the subconscious mind. It's important to note that so many of our behaviors are automatic, meaning they are unconscious actions we take. This is why we often set goals but do not reach them. Setting goals is the function of the conscious mind, but reaching them is the task of the subconscious mind. The subconscious mind occupies most of the brain. It does not work by logic. Therefore, it believes anything that it is told repeatedly by the conscious mind. This is why it's important for us to feed our minds with information from the Word of God. When we do, the Holy Spirit turns that information into revelation, and this soon becomes our new mindset. Every time you give an opportunity for the Holy Spirit to bring a revelation from God's Word, you can be sure that He will turn the revelation of that Word into a manifestation of that Word, producing visible results in your life. Before there can be a manifestation in your circumstances, you must allow the Spirit of God to bring revelation into your spirit. I want to encourage you to read, memorize, and meditate on the Bible. Listen to podcasts, read Christian books. Fill your mind with the truth, and the Holy Spirit will make it come alive, which will in turn change your mindset and transform your life. Pray with me. Heavenly Father, thank you for your word that guides and purifies our lives. Help us to seek you with all of our hearts and treasure your commands within us. Teach us to meditate on your precepts and delight in your statutes, so we may walk in obedience and not stray from your ways. May we never forget your word, but hold it close, living each day to glorify you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Friday. Okay, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 735 points. That's 1.75%. The NASDAQ is down 410. That's well over 2%. S&P 500 down 107, almost 2%. And the Russell 2000 down 56 points, over 2.5%. In the commodity basket, crude oil up $2.27, trading 76.19 last. That's a gain of a little over 3%, or $2,270 per contract traded. Gold up $34.40, trading 27.2520 last. That's a gain of over 1.25%. Silver up 37 cents, trading 31.38 last. That's a gain of almost 1.25%. In the Asian markets at the close, the Nikkei dropped 414 points, over 1%. Shanghai fell 42, over 1.25%. The Hang Seng fell 176, almost 1%. And in the European markets at the close, FTSE down 71, almost 1%. The DAX down 95. The CAC down 59. So, we had a red day in Asia. It was a red day for the UK. And so far, it is a big red radio Friday here in the US of A. On the news front, the Supreme Court is set to hear oral arguments today in a case that could determine TikTok's fate in the US. At issue is a bipartisan law requiring ByteDance, TikTok's parent company, to sell its stake in the app or face a ban by January 19th. TikTok, with more than 170 million US users, is asking the court to block the law's enforcement, citing First Amendment concerns. Biden administration says the law is necessary to address national security risk posed by ByteDance's potential ties to the Chinese government. TikTok said it could shut down the app by January 19th if the Supreme Court does not intervene. President-elect Donald Trump filed a brief last month requesting the court delay the deadline, seeking time for his incoming administration to pursue a political resolution, a reversal from previous attempts to ban TikTok during his first term. Separately, ByteDance appears to be preparing for a potential TikTok ban by promoting its Lemon 8 app, encouraging users to migrate to the platform as a contingency plan. In market news, Stocks plunged today, as you could tell from the numbers I just gave you, as investors digested a final 2024 jobs report that blew past expectations on hiring, raising more uncertainty about the path of interest rates this year. The Dow Jones Industrial sank 1.5%, over 500 points. We've covered all those numbers. And it's all because of the December non-farm payrolls. The report showed a very healthy labor market. Now, remember, this isn't your father's market. Back in the day, good news sent the market higher, bad news sent the market lower. So, here we have good news. The markets, there's blood in the streets. It's a little more complicated than it used to be. The U.S. economy added over 250,000 jobs in the month, while the unemployment rate fell to 4.1%. That's the good news. The less good news is that the strong reading could prompt the Fed to keep rates higher for longer. The 10-year Treasury yield continued a recent uptick today, moving closer to 4.8% to touch its highest levels since late 2023. Oil jumped to a 3-month high today, with traders digesting new sweeping sanctions against Russia as the Biden administration tries to cut off Moscow from crude revenue amid the ongoing war in Ukraine. West Texas Intermediate crude rose as much as 4% to $77 per barrel before paring gains, while Brent crude futures, the international benchmark price, gained 2% to hit $80, the highest level since October. JP Morgan is doing the unthinkable. They're asking their employees to return to the office 5 days a week starting in March. This comes from an internal memo seen by Reuters today. Financial companies have been aggressive in enforcing return to office demands, with many staff being called back as early as 2021. JP Morgan CEO Jamie Dimon and counterparts at Goldman Sachs and Morgan Stanley have been strong advocates of working from the office, saying it fosters better learning, innovation, and culture. It also keeps you from napping on the couch when you're supposed to be working. More than half of JP Morgan's employees already come into the office full time, according to the memo from the bank's operating committee. It is more than 316,000 staff worldwide. Now is the right time to solidify our full-time in-office approach. We think it's the best way to run the company. Well, I think they could be right. Now, we just talked about TikTok. It is in the hands of the Supreme Court right now. President Trump has somewhat changed his opinion on TikTok. Some say TikTok had a lot to do with him actually being reelected. Whether that's fact or fiction, I can't say. But that's it. Basically for news on this Friday. We'll bring it on home and take a look at our news. Logic 247, that's our 24/7 around-the-clock E-mini alert service. We're currently in week 336. Over the last 336 weeks, we have issued over 18,800 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, so far, this recap was done by Valerie at 8 a.m. Eastern this morning. Since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 46 alerts. One never triggered. Still waiting on the outcome of 10. She'll update it this afternoon and finalize it for the week. That gave us 35 actionable alerts, of which 5 or 14% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the purpose of the logic alerts is to teach you how to read a chart. If you're new to trading, when you look at a chart, it looks like chaos. There is apparently no rhyme or reason or rhythm, but there is. The logic alerts, because each one has an entry price, an initial target, additional targets, and a final trade to target, will teach you, no matter what market or time frame you're looking at, where to spot potential resistance, where to spot potential support, and how to find the windows of opportunity in between. And then, yes, again, you can trade them, but make sure you use them for the true purpose intended, to help you learn to read the chart. You want to get to the point where you can look at any chart of any market in any time frame and instinctively know, along with the help of our humble indicator set, what the next high probability move is. About 20% of the time, the market does not do the next high probability thing. So if you're out there looking for that holy grail, that 100% whatever, that means you never have to know the agony of being stopped out again. That's a painful journey. It's simply not going to happen. There are too many factors involved in the movement of the markets. However, once you understand how price flows the same across all markets and all time frames, and you learn to read the chart and know what the next high probability move is, well, you're still going to be wrong about 20% of the time on average. So, a good week. Now, our original alert service, the concierge trade alerts, are a little bit different. The logic alerts can come out anytime around the clock. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. The CTAs are published as a static report 5 minutes before the open, when I can. It used to be shortly after the Globex open, but then I tested for a few weeks, getting them out 5 minutes ahead of the open, and that's worked out pretty good. Now, I'm not able to do it every day, but I think in the last 3 weeks I've only missed one day. But I put a note in the discussion group to let you know if they're going to come out at 5:55 or if it will be shortly after the Globex open. This way you kind of have a heads up and you can be ready. If you're a member or trial member, make sure you read this information and understand it. If there's any part that you don't understand, ask. Be happy to explain it to you. Now, last night, 5 minutes before the open, all members and all trial members had all of these targets. Bonds, silver, gold, the NQ, crude, Russell, the Dow, and the ES, the S&P 500 Emini. 5 minutes before the market opened. So let's go take a look at this big down day. Now, on 2 occasions previously, we found support at this area that we highlighted in a members-only workshop probably a month ago. That was where the black step line crossed red and falling, turning it to blue and climbing. That created an inflection point. Important prices, important areas are almost always tested. We tested it here on the 20th of December, again on January 2nd, and here we are today, potentially trading through that area on the 10th of January. Our next major, if we close below where we are right now today, then our next major area for support will be the 38% fib retracement. We're below the BBC. We've got red and falling. The step line already crossed, and we got our pullbacks to the BBC. And so if we get below right there where the step line hooked up, that looks to be about 58.42, 43, just a little bit lower than where we are now. Then there's a vacuum down to that 38% fib extension at 58.12. Price travels in legs, leg retracement, leg retracement. The pullback to the BBC holds more often than not, but eventually it will trade through, as it did there. Here, this was a rare occurrence. We held 1, 2, 3, 4, 5 trading days in a row, going on to put in the all-time historic high on December 6th at 61.78.75. The green line is called the BBC because it stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices, no matter what market, no matter what time frame. When price crosses below the green line, we're bearish and expect lower prices, no matter what market, no matter what time frame. And as you can see, the pullback to the BBC, whether it's pulling back from above or from below, holds more often than it doesn't. Now, the importance of a daily chart is that institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Most institutions have accounts in the hundreds of millions, billions, even trillions of dollars, so their traders trade in some pretty impressive size. So it's that size that moves price. So when you look at the daily chart of whatever it is you trade, whether it's futures, stocks, crypto, Forex, ETFs, you're getting a free look over the shoulder of what the deep pockets are doing. And what have the deep pockets been doing for most of this session? Well, red means selling. Green means buying. It takes financial commitment for price to rise. But all it takes for price to fall is for the institutional traders to hit pause on the buy side. When they do that, institutional traders that specialize in selling short, of course, they'll come out of the woodwork and compound the issue and drive price further down. Anyway, I highly encourage you, whatever it is you trade, to spend a couple minutes before you start trading and use the daily chart to not only look over the shoulder of the deep pockets, but to identify where the market is most likely to find major support or major resistance, things you won't be able to see on your smaller time frames. Now, all alerts are created on the 30-minute chart. The vertical lines separate today, Friday. Yesterday we had a short day. Thursday the markets actually closed at 9 a.m. Eastern. Here's Friday, here's Thursday, here's Wednesday. These horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. And that's how price flows, from support to resistance. Remember, the pullback to the BBC holds more often than not. From support to resistance to support to resistance. Even though we spiked it, it's still touching it. So that held. And even though we spiked the zone, both candles were still touching it, so it held. And it held. From resistance to support to resistance, back to support. And then we've been bouncing. This zone is 58.34/35. In the overnight session, we kept bouncing off of that zone, 34/35. Then we caught a big bounce that took us all the way up to 59.59. That would be this area right here. Then the news came out, the good news, remember, that sent the market substantially lower, because traders realized that there's now less chance that the Fed is going to cut rates at the next meeting, because we got good news. I know, strange world, right? Now we've had a significant drop. You'll notice on the way down, you had price, step line, red and falling, BBC. So what is changing right now in this picture? live in real time. See how the step line is hooking to the right and it's about to cross the step line? When that happens, you should anticipate price attempting to return to the BBC. Price always reverts to the mean. In our case, the mean is green and we call it the BBC. Now, once the step line crosses, that'll probably take another 30-minute candle. There will be some potential obstacles on the way up, the main one being this weekly zone, this high right here, and then the BBC. Now, one scenario that could unfold is price rallies up to the zone and consolidates for a few hours. If that's the case, then the BBC is going to drop to meet price as opposed to price pulling up to the BBC. And that's a different dynamic. Okay. On the Dow, bottom really fell out. Now the lowest zone is down here for the week at 41,830. We opened last night. This was the opening candle. Remember, everyone had these targets 5 minutes before the open last night. We opened below the BBC at 42,821. Now, just to the zone at 760, that would have been enough to give you your goal for the day for a couple days. But price continued dropping to the short target. Now the market found support right here based off this low from yesterday. That support sent us up to the BBC along with blue and climbing. We got a leg and a retracement, a leg and a retracement. Notice on the retracement, the pullback held, but it spiked it. In other words, this was a red candle all the way down to the zone. But by the time the 30-minute period was up, we're back to the zone. We never physically lost touch with the BBC. Next candle did the same thing. That led us to this high right here, which is this high right here. Resistance will send the market looking for support, which it finally found at this zone. After spiking it, it closed here. And then we made a half-hearted attempt to retrace back up to the zone. But you see how we had this perfect stack coming down? Price, step line, red and falling, BBC, until now. We're seeing the same thing happen that we saw in the ES. The step line is crossing red and falling. If it successfully crosses it, then you will most likely see price retrace back to the BBC, and the BBC just so happens to be sitting right on top of that zone right now. On the Russell, this was the opening candle last night. We opened at 22.45 and a half, and we dropped to the zone at 22.36. So again, we'll just call the open 45 to 36. That's 9 points. It only takes 2 points to get your goal for the day. From there, we bounced back up to the BBC, consolidated, attempted higher, but you can see this high right here, right into this area right here, where the red line crossed the green line. When you have a bearish cross, the first time price revisits that area will almost always be good resistance, and it was. So that sent price substantially lower. And again, we have the step line attempting to cross red and falling. We even have a little doji right here that increases the probability that we are going to see a move back to the BBC. Now, when price encounters a weekly zone, 70% of the time you're going to get consolidation, 20% of the time rejection, 10% of the time the slice. The slice is when a 30-minute candle slices through a zone like it's not even there. Under normal market conditions, when it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. But the selling pressure and lack of buying pressure did not allow that retracement here on the Russell today. On the NQ, this was the opening candle at 21,302. We'll just call it 21,300 to be conservative. And it took us right down to the target at 21,215. Is that low from yesterday? We hit the target, 21,215. Now, that's about 85 points at $20 a point. You can do the math. That's per contract traded. Support sends us to resistance, back to support, back to resistance. We didn't get all the way up to the long target. In fact, when we fail to take out this high right here from Wednesday, that was a sign of weakness. It was a heads up, and just like on the previous market, came down through the target, came down through the zone and the target, retraced about halfway back up, but we still had that perfect stack going, and so price continued lower. Now what's happening? Step line is crossing red and falling, and what's price trying to do? Get back to the BBC. Crude oil, big day. This was the open last night. We dropped to the BBC, the pullback held. That sent us up to the target. We got through the zone, got through the next zone, and made it all the way up to this week's highest weekly trading zone. We spiked it a little bit. The step line had already crossed, yet price continued higher. That's a little unusual, but it's kind of like a compulsive, obsessive compulsive thing. It wanted to go up and touch that zone, and that sent price back down to the BBC support. The pullback held, and we did get a little bounce, but we have red and falling overhead. And as you can see, this candle's printing red. So while the pullback holds more often than not, this very well may be one of those occasions where it trades through the BBC. If so, then 75, this low right here is 75.35. So I don't know that I would want to trade that. In fact, I would look for a different market. Because you've got this resistance overhead, and you've got potential support here, here, and here. And you need 10 ticks to get your goal for the day, and I just don't see a clear view for that to happen. Gold on a wild ride today. Here's where we opened last night at basically 26.93, and we ran up $300 per contract traded to 26.96. Then we got a leg and a retracement. Now remember, when we trade through a long target like that, price will often pull back to that target and find, in this case, because it's a long target, support. So we get a leg and a retracement and a leg. And then this was wild. This was that news at 8:30. And then we had more news at 10, I believe. Look how far gold. This was a huge red candle. This all happened inside of a 30-minute candle. This was a huge red candle all the way down to the zone. We spiked it. And we recovered to be back above the BBC, back above red and falling, turning it into blue and climbing, which gave us this leg up and a retracement, a leg that continued up to here and then retraced in the same candle all the way back here. This is just wild movement. These are 30-minute candles. It's rare to see this, but we're seeing it. Now the step line just crossed blue and climbing. Okay. See, when it happened back here, what did we do? We pulled back to the BVC. Now it's happening again. So I'd be very cautious on any long trades at this point, because at some point price is probably going to start backpedaling and trying to connect with the BVC. Silver was also a wild ride. This was the open, pulled back to blue and climbing, sent us up to the long target, and we went from resistance back to support, back to resistance, back to support, back to resistance, back to support, over and over, again and again. And then that same wild spike, that's right here, took us way down to this low from yesterday. Now the metals were open yesterday, so it brought us to that low, and then in the same 30-minute candle we made it all the way back to the zone. Now 3120 is the highest weekly zone this week for silver. Right now we have the step line crossed. We've already pulled back to the BVC, but you see how blue and climbing is directly above price. It's probably going to turn into red and falling. Now I have a chance, or I have a suspicion that there's a good chance by close of business today, price will be at or below the highest weekly zone. Often we'll see prices trade above the highest or below the lowest weekly zone. But over the last 15 years, the majority of the time, price will close at or below the highest or at or above the lowest. Of course, there have been handfuls of weeks, or two handfuls of weeks, we'll call it that, where one of the markets traded above the highest weekly zone or below the lowest weekly zone. Okay. All right, that takes us around the world, and here we are sitting pretty much where we were look for this to start moving up based on this step line crossing here. Remember, you got potential resistance here, then here. Now, when price encounters a weekly trading zone, 70% of the time you get consolidation. So if that's what happens when price gets to the zone, then as we consolidate sideways, the BVC will drop to meet price. Okay, Michael should be here any second. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name and your phone number. We're not going to call you, but we will send you an email that explains what it means to become a passport holder, and there'll be a link you can click to actually become a passport holder. When you become a passport holder, you get 2 hours of live training every trading day. On top of that, you have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Future, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published every evening. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. And you'll be able to attend the members only workshop every Thursday night. It's everything a trader needs, all under one roof, one low price. And you get the golden key that opens the private channels in Telegram. When you're on the trial, you have access to the discussion group and other things. But once you become a passport holder, then you have unfettered access to every channel. And we have quite a few. Each one serving its own purpose. So again, just send your email to support@cfrn.net. And the subject line, "I want to become a member." Put your name, your phone number, and the body of the email. And we'll send you off an email with all the information you need. And if you have any questions, of course, you can email us back. Or you can click the link and become a member. All right, I'm going to put it on hold for right now. And Michael will be here in just a second.
Okay. Got it. Dwayne had to step away, so I'm just going to grab it right here, guys. All right. I just got the note. All right. So let's see who is in here right now. All right. Good stuff. So we'll go over what we did this morning. Okay. And all that stuff. Man. Okay. All right. Here we go. Good afternoon, everyone. Today is Friday, the 10th day of January 2025. All right. Now, if you have not taken a free trial with us, we need to update the link that's in this. But if you have not taken a free trial with us, just go here. Just go here to mytradingiq.com, click on this link right here, It's going to bring up a page that it will look not like this. Anyway, the page that it will bring up once we get the updated link. All we ask for is your name, your email, and your phone number. Down at the bottom, you can give us your NinjaTrader machine ID if you have NinjaTrader, and give us your TradingView login ID. Now, really, you want to give us your TradingView login ID. There is no credit card required for that trial. All right, no credit card required for that trial. We really need to get that TradingView login ID though, because that's what the indicators that we use are on. They're on TradingView. If you have NinjaTrader and you're just going to trade on Ninja, then we don't need your machine ID. But if you want to use the charts that we do have on Ninja, then give us your machine ID and we'll set you up with those charts. Okay. All right. So this morning, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 10th day of January 2025. We made 189 ticks on the NQ, 12 ticks on the Russell, 70 ticks on the gold, and 0 ticks on the ES. That put us at $1,705 with one contract this morning. Today it took 1 minute and one trade to get the goal. Today at that point, we're up $1,000. We had 20 ticks on the Russell with 10 contracts on. We took a total of 37 trades this morning. So on the month now, 37 trades, David. You did 100 and something? That's insane. Okay, 37 trades. On the month now, we're at $11,432. All right, we're averaging $1,905 a day. I told you at the beginning of the year, switching to this divergent setup, these are going to be regular things. Daily gains of $1,000 or more are going to be a regular thing. You see, when we started to switch to that last year, right here, daily gains of $1,000 or more are going to be a regular thing. The numbers are going to be off the charts this year, guys. We are on track to have our best year ever, and I anticipate that it will be. All right, so over 6 business days, averaging $1,905 per day. So far this year, we've gotten our goal 6 out of 6 days. We've gone 21 days now since our last non-green day. That was in December, right here. Our only non-green day of 2024 was right there. And then we had our best day of 2024 right here. So we had our worst day of 2024 and our best day of 2024 within a week of each other right there. 2 weeks of each other. And of course, this year we started off with a better day than our best day last year. So all good stuff. The 2420 blueprint, right now we have 22 minutes. We're in 22 minutes. So it would be 3 times this number is what the hourly rate is. Okay, so $3,900 is what the hourly rate is right now. It's actually just over $4,000 because that 55, it'd be $4,045, I think. $4,045, I think what it would be. Maybe $4,060 an hour, something like that. Right about $4,000 an hour is what it comes out to. Okay, and that's just going to keep going up and up and up as well. Now, Dan, are you or Jill in here right now? I don't see either one of you logged in. Okay, no. So let's go over the trades that we did do and didn't do. Okay, we'll start out with the gold. We had quite a few trades on everything today. The Russell, we had actually the least. The ES, I think, and the NQ, we had tied for the most. And the gold is right behind it. We had a lot of trades on every market today. A fair number, almost an equal number of trades on every market. But let's go back and we'll take a look at what happened in here. Right, here it is. Our first trade on gold. We got short on this one right here on gold. We had a big win on that. It was 29 ticks. 29 ticks, 29, 27, something like that. We had a big win on that one. And then the next one I think that we took, there were more trades in here, but I didn't get any of them. There was a short right in here. There was a long right here. There was, actually there weren't that many trades in there, were there? There was a long right here. There was a long right here. There was a short right here. There was a long right here that was stopped out. There was a short right here that did stop out. I got that one. So we went, it looks like we went from 29 down to 11. I don't know. Oh, I remember what it was. I had like an 18 tick stop out or a 20 tick stop out or something like that. No, it was an 18 tick stop out. We went from 29 down to 11. Okay, so it was an 18 tick stop out that we had on that. My bracket wasn't set up right. And so we stopped out 18 ticks on that. We're down to 11. And then we picked up 12 ticks there to get us up to 23. Then we had a break even. Then we went to 35 on that one. We went to 45 on that one. We went to 50 on that one, then 59 on that one, and then 64 on that one, and there was one more somewhere where we went from 64 up to 70. There might have been one in here that I missed on the other side. Probably a long trade somewhere in here like this, but there was a small trade that I missed, but we ended up with plus 70 on the gold this morning. Okay, and you see these in here are some trades that I marked that we had missed, but there were more of them. There was a trade here that would have worked out, a trade here that would have worked out, a trade here that would have worked out, a trade here that probably, oh, I got a little bit of profit on that one. A trade here that would have worked out, a trade here that looks like it, I think one of those encompassed all of these, right? If you got this short, you got some profit on that. If you got this long, then that traveled all the way through. You probably got some profit on it right there. And then right in here, you had another long that worked out. Right in here, you had another short that would have worked out. Right here, you would have had a short that would have been probably a stop out on that one. You had a short here that would have been a stop out. You had one here that I took profit on, a long here that triggered right after that that I didn't get. A short here that would have worked out, a short here that would have worked out, a long right here that would have stopped out, a short here that would have worked out, a long here that would have worked out, a short here. If you shorted this right here, it probably would have stopped you out right there. Okay, and a long right there. All right, so there's a ton of trades, and that was gold. That was just gold. There were a ton of trades available there on gold this morning, and there were way more on every other market, it seemed like. If you look at the Russell, I was using the Russell for a little bit of training this morning, as you can see. But we started out, the Russell's where we got the goal for the day right here on the very first trade. 20 ticks on that move right there. Then we gave it all back right here. We went from, on the Russell, up here, we went from 20 to -5. We had -25 right there. So we're at -5. And then we got a 10 that put us to +5. And then we got a 12 that put us to 17. Break even, then a 20 that got us to 37. And then this right here, I screwed this one up and I stopped out from 37 down to 12. And that's where I ended up. This right here, I screwed up too, but I ended up getting a break even on that screw up. And this right here, I screwed up because I didn't move my stop to break even soon enough, or I had a bad entry, one or the other. Either way, I stopped out. That was -25 ticks. Okay. We had a couple more trades in here. That looks like that one there would have worked out just fine. That would have worked out, well, it would have given you a bunch. The open right here would have given you, it was 20 range, so it would have given you 15, 18 ticks. This would have been okay. This would have been okay. This right here would have been a break-even trade if you got in. Depends where you got in. All right, would have been a break-even trade. This right here was a good trade, and it's about to set up a short right here. So getting ready for the short right here. All you have to do, if we got an up close on this bar, an up close on this bar is going to give us the opportunity to go short. All right, if we get an up close. If we don't get an up close, we're not going to have the opportunity. Now it's a 20 range bar, and the bottom of this bar is right here at 7.5. So 9.5 roughly is where that entry is going to be, roughly right here. Okay, if we get the up close on this, and we get that entry, I'll just be able to jump in right there at 9.5, or maybe even a little better than 9.5, a little bit higher than 9.5. So let's just wait this out, and we'll see if we get a chance to take this trade right now. Okay, we'll see if we get a chance to take this trade live. Let me see if I can even record this. All right, here we go. So what I'm looking for right now on the Russell is an up close of this bar. If we get an up close, it's going to bring that into the overbought by itself, and I'm going to sell the open of the next bar. The up close should be right about here at 9.5. Should be right there. There you go. So I'm selling right there. Okay, I'm selling right there. I'll go one better. There we go. Okay, so I'm short right now at 9.4. The open of this bar right here is 9.5. I just sold it right there. Okay, it's not even a valid trade. I thought that was going to be up. I thought that was going to be the overbought right there. So I'm going to throw myself a break even early right here because it wasn't even a valid trade. Okay, if that would have gotten into the overbought, that would have been a valid trade. But that's exactly how you got to place the trade, just like that. Okay, that's how you place the trade. Now, if that would have gone up into the overbought, it would have been a valid trade. Turns out it didn't, so it wasn't. So I got to break even. But they placed the trade just like that. There's not that much to it, right? And that was the Russell. So on the Russell, we ended up with plus 12 today. The ES, we had a bunch of ES trades today. And we use the ES thing today too, I think. Maybe. No, we have stop outs right there. Bam, bam, bam. Okay. Here we are. Back here to the beginning. All right, so on the ES, our first trade on the ES, wherever that was, we missed all of these right here. This was a short, that would have been good. This was a long from right here that would have stopped you out. This was a short that would have gotten it back. This was a long right here. I don't know if that was 10 ticks or not. If it wasn't 10 ticks, then you would have been able to stay through these other trades. It would have been like one long trade right here. But let's just get to the ones where we did actually trade. Okay, my first trade on the ES. I meant to put that one on, but I missed it. Right in here, we had a plus 12. Then we went on plus 8, got us to 20. Then went to 24. Then we stopped out, went down to 14. Then I had a break even. I don't know what the heck happened there. Oh, we had we stopped out and we went to 14, but that wasn't actually a full 10 tick stop out, but I counted as that. We had a break even. Then we had an 8 tick stop out on this. We went down to 6. Then we had a 10 tick stop out on that and went down to -4. Then we had a break even. Then we had a +4 right there to get us back to 0, and that's where we ended with the ES. You can see there were a bunch more trades in here, though. You would have shorted right there. Would have worked out. You would have gone long right there. The open of that bar worked out. You would have shorted right here. The open of that bar would have stopped you out. You would have shorted right there. The open of that bar. That would have worked out. You would have gone long in the open of that bar. That was pretty close. 10 ticks, so 2.5 points. 975 was 1 tick away from stopping you out right there. This right here was a good trade. This, a good trade. This, a good trade. This right here, a good trade. I don't know why I have that highlighted. I think it was on another time frame we were looking at. This one right here would have stopped you out. This was a good trade. This was a good enough trade. This was a good trade. This, good trade. Then we got a couple of break evens through there. And as we move all the way to the end here, that was it. We ended with 0 on the ES today. You can see we missed a whole bunch of trades and turned the break. If we go to where we are right now, we just had a long trade from the open of this bar right here. So the open of that bar is right there. You have a 10 tick stop. So 73 down to 71.5. No, 70.5. 70.5 is where you stop. It'd be 2 ticks below that. Okay, so on the ES, that's where we stand. The NQ, I'm not going to go through every trade on the NQ. I'll go through the trades that we took, okay, because there are like a million possible trades. And we're using this as part of the lesson plan, as you can see. Let me just hit the Alt back button on this. Okay. I like to get the trade tool off in here before we get started, and before I wrap it up. There we go. Right, so these are all the trades that triggered on the NQ this morning. Our first trade on the NQ was right here, and we got, looks like 7 ticks profit on that one, then 5 ticks on the next one to get us to 12. Then it looks like we went from 7 to 12. Oh no, I'm sorry. That's right. Went from 7 to 127 right there. We had it on the 50 range. Well, this is a 50 range, right? So we had a 120 tick trade right here is what we had. That's why I couldn't figure it out. We didn't go from 7 to 12. We had 7 there. We had 120 tick trade right there. Okay, that brought us to 127. Then here we went from 127 up to 161. Then we had a break even. It went from 161 to 185. Then we had the lesson plan. There were also trades in there. And this is a 50 range. Don't forget, this is a 50 range on the NQ right now. Went from 161 up to 185, then 185 to 189, then 189. Now 189 to 205, 205 to 221, and then we stopped out. I think that was this one right here. So in here was one of the other trades, and there's another one in there too. Then we stopped out, went from 221 down to 169, it says. 161, something like that. And then our last trade on the NQ happened toward the end of the session. Or I don't know where it is. But we went from 161 up to 189. And that was where we ended it. I guess it must have been right in here, our last trade on the NQ. I think it was probably right here, and I didn't color it right. But we got from 161 up to 189. And that was how we ended it on the NQ. Now, on the 50 range on the NQ, right? The stop is 60 ticks, the target is 75 ticks. You trail the break even after 20 ticks in profit, right? So this right here, the open of that bar was the short. The open of this bar was the short. The 50 range bars, 50 ticks, right? The open of this bar was the long. The open of this bar was a short. The open of this bar was a short. Every one of those trades right there had at least 50 ticks in it. You know, even if you're only doing it on a micro, let's just go look at the micro. MNQ, right? If you're only doing it on a micro, you know, 50 ticks is 25 bucks on a micro with a single micro. 50 ticks is 25 bucks. So if you have two micros on, you know, then you're only going to be risking 60 times, well, 30, you'd be risking $60 if you had two micros on. I think you'd be risking $60 with a 60 tick stop. I think that's right, right? Yeah, $60 with a 60 tick stop. And you can see you're making hundreds of ticks in here with two micros on. It's $1 a tick. So, you know, I showed earlier, this is what the liquidity is like in the regular NQ market. And let me bring up the micro market here. I have it right here. This is what the liquidity is like in the micro. See, it's like twice the liquidity, and it should be, because it's, you know, you're trading with a lot less. But you see how the gap in the micro is smaller than the gap in the actual, right there. So even if you trade in the micro for, you know, with two contracts on in a micro, you're getting a buck a tick. You can still get in the market. You'd be long right here. You'd be long at the open of this bar right now. Would be a trade. Okay, that would be a trade for you. Is everybody getting this? Does everybody understand it all? Okay, so this is already gone. This right here has already gone too far into profit to take the trade. After it goes 5 points into profit, you would have moved your stop to break even. So it's done that already. So you can't take this trade right here. But the next opportunity we'll try to get on in here. We have 15 minutes left in this session. Okay, 15 minutes left in this session. All right, so you see how this got into the oversold right here? There's nothing you're going to do there. Nothing here, nothing here. Now, I haven't got to look at all the other things yet. But let's see. Bitcoin's having a nice run today. Pretty good move on Bitcoin. Don't know what that one is. Silver. Silver got beat up a little today. Looks like that one's going to be the YM. Not terribly interested in that. And this one is going to be XRP. And XRP is having a pretty good move today. I don't know what time frame this is on. Oops. I don't know why it's all yellow. Oh, that's why it's all yellow. Okay, so XRP is having a decent day. This is a daily chart. The way this looks right now on the XRP. Oops. Some of you guys have the XRP, I know that. But there's that. I guess you can draw the trend line like this. That's pretty close. So that's what XRP is doing. It's going to break out one way or another, and I think it's going to break out to the upside pretty soon, right? If it does break out to the upside, if it does, this is the leg length. And it's like, you could actually say from here to here is the leg length, but I'm using this right here as the leg length, right? Because it established kind of a base right here in the middle of December. So if you use that as your leg length, oops, that was the wrong thing. If you use this as your leg length from here down to there, this is your 50% mark of it right there. Right, we'll use the fib retracement tool and we'll find that exact 50% retracement level. So that is right there's your 50% marker. So we've already gone down and bounced off of that 3 times. And so if it is going to repeat this leg length, then the next level up should be up there, wherever that is. It's almost new all-time highs. 380, I think, was the all-time high. That's what I think you can be looking at once it breaks out of this triangle right here. Okay. We'll just get back here and see if we can throw some trades on. We don't have anything there, we don't have anything there, we don't have anything there. Does anybody have any questions at this point? Anybody? Right now, an up close might bring this into the overbought. So if it does, and it did, so I'm just going to sell right here. Oops, I'm going to sell right there. Okay, I just sold right there. So that's pretty close to the open of the bar. Now, after it goes 5 points into profit down to 54.75, I'm going to bump this stop to break even. Okay. $54.75. All right, now my stop is 60 ticks away. Don't forget that. It's all the way up there, 60 ticks away. So let this play out. The entry should have been at the open of this bar right here at 69.25, minute 59.75. That's pretty close. You're talking about, 50 range bar. That's not too far off. Okay, put that right there. See if we get anything else. We might get a trade here on the Russell too. Okay. Oh, thank you for that. I'm looking at the MNQ chart and I'm trading on the NQ DOM. Thank you for that, David. I'm hoping we still got the same trade set up here on the NQ. Pretty close anyway, I hope. They usually run pretty close to each other. So let's see. Yeah, we did. We have the same trade set up on the NQ. Okay, so we'll let it run. That makes a little more sense there, doesn't it? So the entry should have been the open of this bar, which is up here at 71.25. So my entry down here at 59 is not as good now. My entry was off by 10 points, 11 points. That's going to stop me out. It did. That entry being off that bar, that bad, that was a mistake. I should add my stop at break even right here, taking some profit in this trade. I would have bumped it to break even after 5 points in profit. Even if I got a crappy fill on this, it was off by like a couple of points. It still would have given me 5 points. That was my mistake. Thanks for letting me know that though, David. I did a trade on the NQ from the MNQ chart. You don't want to do that, as you can see. All right, so if you get an up close here on the Russell, now this is my Russell DOM and my Russell chart, so I won't make that mistake twice. Okay, my Russell DOM and my Russell chart. I'm gonna have to make that up now. All right, we need the up close. So we've now got a low here of 99.5. So it'd be right here at 1.5 would be the up close. Okay, 1.5 is gonna be your up close. All right, and if we get it, I'm going to sell it, I think. Got to make sure that this gets up into the overbought if we get it. And if it gets into the overbought, then I'm going to sell it right in here. Okay. All right. Still looking for the up close. None of the other markets are giving us anything right now. So this is the closest thing we have to a trade setup here on the Russell. See the gold, the black, and the blue went together right there. There it is. So I'm going to sell right there. The open was there at 1.6. I'm in at 1.7. I'm happy with that. Check my stop. My stop should be 25 ticks away. Should be right there. Do I not have that bracket set right? I don't. Okay, so we wait. It did get up into the overbought, and I'm in a good spot. So we just have to wait it out on that one. This isn't painting right, so let's redo that. All the indices seem to be climbing right now, so I might stop out here on this Russell, but all the indices seem to be climbing. That stop out that we got on the NQ, that was a mistake. That was my fault. I shouldn't have stopped out on that. If we stop out on this, I did everything right on the Russell one. So if we stop out on that, it's just the way it is. I've been back and forth on the Russell today anyway. We got the gold for the day on the very first trade on it. That was an easy trade to take. This is an easy trade to take. I don't know if it's going to work out, but it was a pretty easy trade to take. It wasn't moving too fast or anything like that. Do you guys hear that noise behind me? Yeah. That one right there. It did stop me out. Okay. That's a cat snoring. Jada inner animals. All right, so we did end up stopping out on that. That was a regular stop out. All right, the one that I did over here on the NQ a little while ago was not a valid trade. I should have had profit on the one over there. We have time. We have two more trades that are about to set up here. One on the ES and one over here on the gold. Okay, you see how the blue is leading down on both of them right here. So we need down closes on both of these. All right, so we got an up close there. That didn't work out. We just got the down close. We're going to get the down close here on the gold, I think. There it is. The gold's a trade right there. Okay, the gold's a trade, and the ES is not yet, but the gold stopped to break even now. Okay, and what we just lost on the Russell, we just made half back right here on the gold with that one trade. Oops. Oh, that was okay. We got 5 ticks profit on that gold trade. That was pretty easy to take. The ES trade, we're not going to have anything. The NQ is actually going to trade in here. Right now, I can't get to my DOM fast enough. So the ES just had a perfect trade right here too. 50 ticks right there. Bang. And I couldn't get to my DOM. I ended up missing that one. But that's it. These trades are just so simple. Right? We had a decent trade there, got us 5 ticks. That's $500 for me with 10 contracts. We missed a trade here that was 50 ticks. That would have been 50 times 5 is 250 times 10. $2,500 it would have been right there for me. We stopped out on this one over here. That was minus 25. So that was like $1,250, I think, something like that. But it's just so easy. You see the trades coming, you just got to take it. You don't have to try to do 4 markets like this either. If you just do 1 or 2 markets, then you should be just fine. And I showed you even our slow markets like gold still gave great trades today. And yesterday, the only markets that were open yesterday were the energies and the metals. So yesterday, well, the grains for half the day grains. But yesterday we traded copper and gold and crude oil and natural gas. That's what we traded yesterday for those of you guys who didn't show up. And we're up $250 a contract yesterday. This is a short right here on the ES. I think I missed it. 94.75 and it's dropped down to 93.50. So if you didn't get into it, it's too late. I'm in at 94.25. I probably shouldn't have done that, but I'm in at 94.25. because it did go 4 ticks into profit. So you should have bumped your stop to break even on that already. All right, that was a mistake on my part. I shouldn't have done that. But we'll see how it works out. Okay. And the gold doesn't have anything. Yes, I stopped out on it. That was 2 mistakes I made in this session. 2 mistakes, and I stopped out on both of them. Okay, am I distracted? What's going on? So this on the ES, if you got in at the right spot, it went 5 ticks into profit. So you should have gotten your stop to break even on that. All right. And anyway, let's look at, oh yeah, here, one more time. Curious. Okay. All right. So we had a nice long trade from back here. We had a short trade here that should have been a break even. We had a trade here that I stopped out on. We had a trade over here that I took some profit on. Here, is it there or there? One of those I took some profit on. And now we're just waiting. All right. Does anybody have any questions about any of this? Anybody? Questions? Anything? All we're waiting for is the blue to lead into the overbought or oversold. And you just take the trade. All right, the ES is about to set up a trade here. We need the up close on the ES. I'll try to do this one right. We need the up close on the ES. It's got a low right here of 93.25, so it'll be closing up at 95.25. It's right about up there somewhere is where you're going to be selling if we get the up close. Okay, we didn't get the up close. The Russell's actually got a trade in here right now. Right here, the Russell open was right here. Was right here at 2.5. 2.5. So you can still get into the Russell right now if you want to. At a better point. There was nothing here on gold. There's nothing over here. And it's time for me to wrap it up. All right. So let me go through this one more time with you guys. Okay. This morning in the morning session where I didn't make that many mistakes. I did make a couple, but not that many. We're up $1,705 per contract. We're up 189 on the NQ. We're up 12 on the Russell, 70 on gold, and 0 on the ES. Took 1 minute and 1 trade to get to the goal for the day. And I want to suggest to you guys again, on Fridays particularly, when you get the goal for the day, you want to stop trading. All right? Because you don't want to go into the weekend having your goal for the day and having to give it back. The NQs, I'm not the NQ, but the Russell's got a trade here that's starting to work out. We took a total of 37 ticks this morning. So on the month and on the year right now, we're at $11,432 over 6 business days, averaging $1,905 per contract per 2-hour business day. All right, so right now, this is what we did in the morning, and we actually made more than that by the end, but it was pretty close to average there on the morning session. There's a Russell trade going on right now that I just bumped my stop to break even on. Here it is. We'll go look at it. And you can see the Russell trade was the open of this bar right here. It pulled back a little bit. That's how I got in on the pullback. And it just took me out of break even. Okay. And that's it. We have another trade right here on the NQ, I guess. There's a trade here on the NQ that's already run 5 points into profit. There's a trade here on the S about to trigger. It's just trade after trade after trade. You never run out of trades with this thing. Right now, I'm going to throw my stop at break even on the NQ trade. Here it is. I don't have the greatest entry, but I did have enough to stop to break even. I'll lock in 1 point on that, and we'll see where it goes from here. 1 point is what I get. The ES has a long trade. You had a chance to enter the long trade on the ES right back down here. And that was at 89.5. And it started to run up to 93 for 2.5 points. 3.5 points. It's just over and over and over and over and over again, guys. All right. Again, if you haven't taken a free trial, you want to take it, go here to mytradingiq.com, click the purple button. I'm going to create that right now. I don't believe it ever got created yesterday. I'll create that right now, and that will actually go somewhere. All right. And you'll be able to sign up for the trial for next week. And that's it. All right. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am ready.
Okay. Just check. She didn't actually create that, did she? I don't think so. No, she didn't.
Okay, recap of the morning session.
Okay, I'm sorry. I had to space out. She did create that. Okay. The recap of the morning session. Today, it took us 1 minute and one trade to get to $1,000. $1,000.
Good job.
Thank you. Thank you.
All right, guys, we have covered everything. We'll take one last peek at the daily chart to see if anything's changed. And what we talked about. Market found support here. And it's now backpedaling. So we're well off the low of the session, and we're well off the high of the session. So how we close today will be important. I suspect we'll close closer to the low than the high, although the markets have ran up just a little bit. I think that's just a pullback and an ongoing downtrend. On the 30-minute, it looks like this. Remember, we talked at the beginning of the broadcast, when the step line crosses red and falling, expect a retracement back to the BBC. So it happened as we thought it might on the ES. We talked about it on the Dow. See, when this on the way down, price, step line, red and falling. But once that step line crosses red and falling, what's price trying to do? It's trying to get back to the VVC. Price always reverts to the mean. Let's see, ESYM on the Russell. The black step line has now crossed to the right side. So price will most likely continue to advance, or at least attempt to get back to the VVC. These are all things we talked about at the beginning of the broadcast before the step line crossed. NQ crossed and ran right to the VVC, as we suggested. So, does it happen 100% of the time? No. Very few things happen 100% of the time in the world of trading. Does it happen more often than not? Well, I just showed you 4 examples. Crude, remember we talked about the pullback holding, but red and falling overhead represents resistance. So the pullback initially held, but we may see price trade down through the VVC. Keep in mind, we had a huge rally in crude today. We hit the highest weekly zone for the week. Price could just get trapped in this area right here and ride sideways into the close. Gold, the step line crossed, and we got a retracement back to the VVC. Silver, same thing. Blue and climbing has now turned to red and falling. And so price will most likely. Now remember, we're above the highest weekly trading zone on silver. But as I said earlier, based on the past 15 years of history, by close of business today, just based on history and nothing else, 15 years, we would expect price to be at or below the highest weekly zone. So we'll just have to wait to the close and see how that pans out. Looks like we've got about a 50% retracement of the day's move down. Once price hits the BBC, that's when things may change, and you see price. See, we had a huge leg down, retracement, and then we look for another leg. That's how price moves. Now when you look at a 30-minute candle, it looks like, well, that just moved in a straight line. But as you can see here, okay, we had a red candle, then we had a green candle all the way up to here. Now we're close to having a doji, but there's still 22 minutes left in the life of this candle. So you just be patient, wait and see what happens, whether the pullback holds or price trades through it. One or the other. Already covered how to become a member. Just send an email to support@cfrn.net. In the subject line, put "I want to become a member," and we will send you the instructions to become a member. Our good word for today: work on improving your communication skills. Proverbs 21:11. When the wise is instructed, he receives knowledge. Whether in your personal life or your career, learning how to communicate with others is essential to success and happiness in any relationship. Apart from obtaining facts, communication should deliver a way to gain some understanding into the heart and mind of another person. And good communication calls for translation. Really, you're learning that other person's language. We all use the same words, but we have unique languages when it comes to love. What you mean when you say, "I need someone to be here for me," might not be what the other person means when they say, "I will be here for you." You need to learn their language without prior assumptions and incorrect projections weighing you down. Such interpersonal literacy will serve you well for years to come. It will stop you from treating them as though they are simply you in a different shape, or imagining that they are just like your best friend. We all need to love and be loved, but we use different means of communication to express our desires. Don't be fearful of checking terms and comparing definitions to make sure you're both singing from the same song sheet. A good practice after having a conversation is to summarize what you took in from the conversation to ensure you understood the person correctly. This gives them a chance to correct any misunderstanding. You may be shocked at how many times you hear something totally different from what was intended. Lasting happiness doesn't come from owning things. It comes from having good relationships. So work on improving your communication skills. It is well worth the investment. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.